I was telling them backstage I've been in Vegas for about 8 days now, which is apparently a record. I don't recommend anyone doing it, but it's great to be here.
He's still alive.
I'm still alive. Probably the worst eating habits the last couple days, but we'll be really clean. I'm going to take some notes from Alexander, I think, after this session. So super excited to be with you here today. We're going to kick things off first with Anthony. We have a great conversation. Anthony, AI and implementing AI at these financial firms is top of mind. Everyone is talking about it, but there's risks in doing so. So how do you manage that risk while still implementing AI and moving forward?
Yeah, I think the mindset to take for us is that with any new technology, where you try to innovate, there's always a bit of risk. But I would say with AI, the thing that's a little different is that you can really see the huge benefit that comes from it. Like I'm not talking about a 10% payback or 20% payback, but I think streamlining some efforts that have been so manual that require a lot of people and allowing for us to apply more judgment processes with AI, I think is a huge win. And so when we look at the ROI case, it always, I think, supports the push to accelerate our efforts here. And the key thing for us is that, and the thing we're learning a lot is it's not one of those things you can just set and forget it. And so it takes constant monitoring. So I don't know if we'll automate. I think there's this future of the world where everything can be streamlined through AI. And maybe while some of that's true, I think there's always still going to be that human element. And that's what we constantly balance. And the key thing we try to do is on a weekly basis, kind of gauge where we are at. And I think that so far it's proven to be, I think, very encouraging.
And kicking it over to Alexander, how has AI kind of reshaped the risk framework?
Yeah, I think there are incredible opportunities for AI to reshape the risk framework because a lot of risk frameworks, they are kind of static, especially when you do risk assessment. I'm not talking about real-time use cases like fraud and credit, a lot of great advances that have been for a while, but the core risk management, implementation of the Basel framework and core regulatory compliance, this is very static. It's a huge overhead for the business. It really impedes the growth and lacks the tools. And I think the right motion is to really invest in development of these tools to make it as easy, as straightforward as doing engineering and marketing in the AI days.
When you have conversations with people in the space, what are some of the things that they're bringing up to you regarding this topic?
I think one of the biggest challenges is that there are a lot of bespoke and disconnected tools that people use for a variety of use cases, for example, for marketing content review, but then you lack the foundation. You still have to put a lot of human effort in developing the foundation. And the existing tools, like the GRC type of tools that used to be popular 20 years ago, and everybody used them as a system of record, they are not helpful anymore because you cannot afford to have a team of 100 people to work and manually read the regulations and understand the implications, do risk assessment, work on the control framework. That's really the biggest opportunity.
And Tara, I want to make sure I get to you as well. At JP Morgan, what's one of the biggest risk hurdles that you've been seeing as it relates to AI?
Yeah, so for us, I think just because of this operating scale of our organization, we've been considering the question of, I would say, decentralized versus centralization and sort of overall management of our AI enablement program. So, for example, a year and a half ago, we made the choice to create a new central reporting organization in the Chief Data and Analytics Office, which reports up into our operating committee. It's incredibly empowered by our executive team. It's led by our Chief Data and Analytics Officer, Teresa Heitzenrether. I sit on that management team, and a lot of our objective is actually sort of looking out across all of our lines of business and supporting them in considering controls uplift questions, appropriate risk management, objectives and outcomes related to AI enablement, and holding that in the same space as ensuring that we also have this capability of sort of letting the businesses run with the use cases that are going to be most effective for them and produce the most sort of high value at the end of the day. And we track and monitor all that centrally in a way that allows us to really understand which it's sort of a scout and scale play. We look across all of those different hundreds of use cases. Now we've got 400 models in deployment, and we're able to sort of see the ones that are being used in one circumstance in, for example, one line of business that might actually come in handy on a more scaled basis, and we can sort of contend with that centrally. I think the other risk is more outward facing, and that has to do with the regulatory environment right now. And this is where I spend a lot of time and space kind of thinking about these issues on behalf of the company. I think as AI has captured increasing attention of sort of the global public policy making community, we're starting to see increased regulatory fragmentation. There are just different approaches that different jurisdictions globally are taking in how they approach AI risk management. And not just for our sector, but now we're starting to see overlap in some of those requirements with more broad scale regulatory efforts, like, for example, what the EU has conducted with the EU AI Act in recent years. So I think we see the risk of a sort of lack of harmonization, which bears on businesses like ours because it makes it more challenging to contend with diverse requirements in a way that allows us to effectively risk manage for our business. So that's something we're keeping an eye on as well.
Thanks. I'm going to switch up the flow a little bit. We're going to go to Alexander now, kind of on some risk-focused topics, and then we'll go Anthony, and then back to Tara. When we were talking a little bit before the planning for this piece of content, we wanted to try to pull out some case study, and Alexander pointed to one that I want to tee up. So when we look back to the Evolve Bank Synapse crisis, so as it relates specifically to that, when we talk about compliance versus innovation, that challenge between the two, could AI have helped either mitigate that from happening or just get rid of it completely?
Yeah, absolutely. Just a reminder, in the Evolve crisis, it led to loss about 85 million of customers' funds, and about 100,000 customers have been impacted, which kind of caused the freeze of fintech for a while, which was a major disruption event. And one of the core challenges and the roots of this is lack of oversight and really visibility into accounts and monitoring. And because it was a complex system of multiple entities working together, more than 60 fintechs worked with Evolve Bank, and each of them had their different standards, different systems in place, and there were not much rigor in the oversight. And as a result of this, things just went south. And it's an incredible opportunity for AI really to be able to streamline, to follow the same standards, to enable technology to do this automatically versus having each fintech, which has different stage of their product market fit and development, to hire a compliance team, like that. Things work together collectively, and there is a clear picture driven, and the reporting makes easier because not everybody, to your point, can afford, like JP Morgan Chase, to have a very large organization with a chief analytics officer, and a lot of companies are much more leaner, and you need to have technology to come and help and to have solve this complex oversight challenge through artificial intelligence.
Can I add a point here?
Yeah.
I think one of the things that's actually interesting is anyone implementing AI, at least at the scale that we're kind of talking about in this example, they really have to think about themselves as system architects. I think a lot of times the people don't realize is that AI, if you do it, there can be a way you do it right, and there is a way you can do it wrong. And because it just magnifies what your existing workflows are. So if you have a dysfunctional or inefficient workflow, what ends up happening is AI magnifies the inefficiencies. So you probably want to say, as an organization, you want to make sure there's someone on top that's actually looking at it across all these systems that are being implemented, or else what could happen is your organization might actually be worse off than it would be better off. Just something to kind of call out. And I've seen so many organizations that are headfirst jumping in, and then they delegate it to a smaller team. And that smaller team's just running these uphill battles to try to streamline everything. And then at the end product, it becomes a magnification of how the organization previously existed, except even less efficient.
This is across lots of other spaces, but what I really love with what AI has been able to do is it's really the great equalizer where, if you don't have this large, or if you can't have this large team because maybe you're not at the right stage yet to be able to afford that, you can still be able to put the right team in place to help mitigate a lot of these risks that we were talking about. And then even when you get to the larger stage, right, with JP Morgan, it even just makes you even that much more, provides you with that additional superpowers as well. I'm going to kick it over to you real quick, Anthony, and then back over to
Yeah.
Tara. And this is similar to what you were talking about, but when we talk about AI and compliance, how can AI help streamline that compliance process?
Well, if you look at how compliance does today, and you look at companies at sheer scale, it's just the big challenge is keeping your eyes around every element of the process and making sure every document and everything is done right and reviewed, just because there's a lot of stuff in that process that's very inefficient. I would say the very first thing that AI unlocks is that it allows, on a compliance side, to have real-time monitoring of every part of your process, if done right. The second thing I think it does is it allows the people to apply judgment working in partnership with the AI. So the AI is doing a lot of the tedious work, and you end up reviewing cases on a compliance side where you have a lot less false positives, and you're focusing on the true cases that really require compliance to get involved with. I would say from what we've seen so far early on, it's made our compliance team a lot more effective, and I think a lot more efficient. And I think that in terms of job satisfaction, we haven't gotten a rating on that yet, but I would assume they're a lot happier because they're not doing a lot of the tedious work, and they are spending most of their time in partnership with AI and tech to be able to make sure that they're focusing their time on the best time spent, which is applying their judgment to cases and reviewing the ones that actually really need their attention versus, attacking something and finding out false positives in the process.
Coming from healthcare originally, we always talked about false positives, and it was always one of the reasons why you shouldn't do not to go on a tangent, but like the scans, right? Where the scans could tend to give you a lot of false positives, like the Pernovos and things like that. But there's certain things I think that false positives get overstated. I would much rather have false positives and then have an opportunity to dig a little bit deeper into those false positives than not have the false positives at all. I'm going to kick this over to Tara.
But just one quick thing there. But it is how you want to apply it, and you can apply those filters. What I would say, though, is if you look at some of these false positives versus not applying, being able to look at every case, it's just much more efficient and consistent. AI is actually much more consistent of how they evaluate their parameters. And humans, depending on they have a good day or a bad day, you're going to have inconsistencies of that, which again leads to the false positives. So I'd rather us be within a band that we can consider what is the false positives we want to accept, and then let humans jump in after that, because I think what we've seen is AI is a lot more with machines, a lot more consistent than they would be if it was not the case.
Oh, thank you for that.
Yeah.
Actually, I'm going to, for when we talk about, can AI keep up with compliance? How does, so for Tara, how can AI help compliance keep up with the ever-changing landscape? Obviously there's more likelihood of attacks now. There's a lot of organizations that are either trimming inside. So how can AI help keep up with compliance across the board, Tara?
How can AI help keep up with compliance? Not the other way around. Is that what you're asking? I think that it's a lot of the sort of risk management capability uplift that we just talked about, right? I think the ways in which AI can be supportive of enhanced compliance and risk management in an organization like ours include in supporting operational efficiencies. So this has to do with the paperwork reduction that you talked about for individual employees and for organizations inside of institutions. I think that AI can help support. I actually, the comment I wanted to weigh in on the false positives conversation was that I actually think I think some of this benefit can be drawn from internal efficiency gains into customer experience realms as well. And we see that in the fraud detection space in particular, in our case, where we've been using AI for, it's one of our earliest use cases for applied AI at JP Morgan, and it has significantly reduced our false positive rate for fraud detection. And I think that's important from a customer experience perspective for us as well, because it means that it's fewer times our customers are having to make calls to try to make corrections, and just overall supports enhanced security, cybersecurity, fraud security for the firm. So I don't know if I've perfectly answered your question, but I think those are some dimensions of how it can support those enhanced capabilities. I also think that it's funny. Again, I'm going to arc this into the sort of external world policy conversation because I think that so much in the AI space, is my mic working, is relevant there, and it's such an evolving ecosystem right now. We've had a lot of conversations with our regulators actually relatively recently about how AI can actually help support the supervisory experience, regulated banks as well. And in that case, our regulators who we are in constant conversation with and constant reporting relationship with have to process a lot of paperwork too. And it actually helps them be more effective at their jobs. It helps them be more enabled in supporting us in appropriate risk management and regulatory compliance. And I think supports a more effective, stable global financial system overall to have these tools actually in the public sector on the other side of the table, enabling and supporting banks in that aspect of risk management as well. So I just want to close the loop on the compliance discussion by tying this to the organizations to which we have to be in compliance with, which is ultimately our regulators in our case.
And I just wanted to add a little bit that I would make even a stronger statement than it's not AI supporting compliance, but in 2025, there is pretty much no compliance without AI because compliance became exponentially harder. Think about all the change management that happens with regulations. Now states would be stepping in, how you stay on top of it. And the business product development cycles, they got much faster. Rather being a 2-year cycle, it's on a few weeks. Products are being shipped quicker, and you have really to connect the dots. And then the complexity of the banking as a service and other complex ecosystem with third-party risk management. This makes really AI a necessity for success of compliance.
The last thing to say on this point too, just layering on, is that it's not new. This is one of the oldest sort of use case areas for applied AI in the financial sector. And I think that the capabilities that we're starting to see emerge now are enhancing, but it's sort of a two-way street. And in some ways, it's almost like a dual-use technology in the way that you're describing. The complexity of the regulatory environment, because of the complexity of the technology, means that we have to enable more sophisticated solutions, basically.
As we start to wrap up here real quick, I would love from each of you, we'll go down the row, one key takeaway you want the audience to really keep with them after this conversation today. Maybe it's something they can implement internally, but something that you want them to take away from this balancing risk and ROI talk.
Yeah, I would say the biggest takeaway I love the audience to take away is that this is happening. And we will be moving forward. I think the technology is only going to get better. And I think that the quicker organization gathers where they can align their organization to figure out how to solve the problems that come with automation and compliance, as well as the AI together holistically, the faster the organizations can be effective. And it will create some competitive advantages for those that figure it out sooner than later.
Yeah. One takeaway I want to share is that it's not the burden on financial services that causes complaints by the business, but lack of technology for compliance, which really makes people frustrated with the regulations. So if this technology was there, we would be in a great spot.
I agree with that point. I think I'd layer that the effective risk management practices are going to become, as you said, a competitive advantage for firms, and the organizations that can get this part right are going to accelerate themselves in so many other dimensions. And I think that this ties back to the whole theme of this conference, given the opening last night. Customer trust is sort of at the heart of all of that. So,
yeah, it's I lied. One more thing. In building trust with AI within, let's talk from within your team. What I've noticed when I've talked to a lot of people, you're either all in on AI or you're super hesitant with AI. So when you talk to all of your teams, for those that are hesitant to trust, what's the conversation look like? 1 point each for the last 30 seconds.
I think this transition is similar to what happened with the internet and maybe PCs earlier. And people, there were always going to be people hesitant. And as you look at where the world is, I would say the world's a better place with technology involved as a partner versus something that we think is that we want to kind of try to stop. And that's a conversation we've had internally.
Yeah, I think it's all about understanding the technology and the benefits. And if there is robust dialogue around these points, then the companies would greatly benefit around it.
And Tara?
We've seen a lot of success from running smaller scale, more internal facing experiments and scaling those up. So if you can provide proof points for value delivery and performance, it makes a huge difference in getting everybody on board. And I think it's a great way to scale capabilities and use cases across organizations that are more skeptical.
Awesome. Thank you, everyone. Really appreciate your time here today. Thank you